Welcome to TRADEREP. This is Shorthammer. It is the 14th of June 2019, and we are looking at Amazon. Now, Amazon, we're looking at the daily chart. I wanted to reiterate, just from a higher time frame view, what we're looking for on Amazon. What we're looking for is a pattern repeat, and I want to kind of reiterate this so that we're clear on what we're looking for here. So back on the 16th of April, we pushed through the top of this supply demand zone, this 1858.26, and we closed at 1863. The next day, we remained above the 1858. The day after, above the 1858. So these were basically two consolidation days, it seems to be. Then we had a dip to the 1845 and an explosion to the upside, and this began the next leg of the 200-point move that we had from this area. The second 100-point leg began here up into the 1950s. Now here we had a push up over the 1858.26 supply demand zone. We closed at 1860. The next day, yes, we pushed higher, but still the close was within range of this of the close of the previous day, which is very similar to what happened on April 16th. We had so basically this is similar to this as far as a consolidation day, even though we pushed a little bit higher. The next day, we had a push down to the 1845 and a pop, but we had no follow through. The market momentum just wasn't there. The day after, we had a push up here, and what we need is more continuation. So we'll see what happens later today if we see continuation in the market. One of the things that could influence this is going to be the retail sales numbers. So we'll see what those are. But even that report is going to be interesting, because if the report is bad and retail sales numbers are down, then that means that the Fed may feel pressure to cut interest rates, which means that the market wants interest rates to be cut, which means that we may go up. If the retail numbers are good, the underlying economy is good, so we may go up. So we have to see how the market digests those numbers and what the reaction is going to be, because a lot of tickers are at the mercy of all this different news and data that's coming out. Especially right now, the market is very, very, very sensitive. So let's go down to our 5-minute chart. So when we opened up, we had this trend line here, which is a line from yesterday. So there we go. This is our trend line from yesterday that we just extended. So it was also valid going into Thursday. And we drew a line here pre-market just to see what would happen if it would be tested or not. And it just so happens that at the open, we had a dip. Perfect area to buy. Or if you didn't feel that this line was valid as far as the intraday, it was here. But if you bought here, this took off to the upside, and you can sell anywhere in here. You can sell going into the 1875, this area, which was the top of the channel that we've had drawn in here since Monday. Or you could wait for weakness in the candle for it to come back down and for you to get out there too. Or you could have waited for a retest. So we pulled down, didn't quite tap, pushed back up, came back through here again, and tapped the bottom portion of this micro trend, which is Thursday's trend, bounced back up, found resistance at the 1875, and also the previous day's uptrend, bounced on the micro uptrend for Thursday from pre-market, and then we just kind of went sideways and pulled below the 1868s, went above, below. So this is interesting. So what are we looking for Friday? Well, 1868 is a potential resistance area because that was the bottom of the channel for Monday, and this resistance area has been valid the entire week. 1875 is also an interesting area. That's the top of the channel. And it's funny how this kind of came into play today as the day progressed. So what we're really going to look to are the retail numbers. If the market reacts to the retail numbers in a positive way, we're going to run. If the market reacts to retail numbers in a negative way, we're probably going to dip. So it just depends how the market reacts. I'm not sure it really matters what the numbers are. The most important thing is going to be the market reaction. So I'll be watching tomorrow. If we start running and Amazon gets up over this 1875 area and starts to leg, then we've got something. If Amazon hits the 1875, rejects, and comes back down below 1868, I'll probably start looking for a short position. I'm also going to watch the interaction with the 200 SMA to see if this gives Amazon some support, or if this becomes an area of resistance or oversupply for Amazon. So that's what I'm watching for on Amazon tomorrow. Do we stay above this 1858 area? 1. 2, do we break the 1875s, find support and springboard and push, similar to what we saw on the 16th of April through the 22nd of April, that push up and continuation towards the next day, that push up into the 1900s, 1914 area? Or do we get below this 1868 and have a down day? So we'll see. We maybe open up gap down, and if that's the case, if we end up gap down, I'll wait for a pullback and test of prior levels before I look for a position. And if we gap up, a pullback and hold of prior levels before taking a position. And that is my plan on Amazon. And also make sure to keep an eye on the SPY to see which direction, just overall market trend. Just with all this different news that's coming out, Amazon may not have its own catalyst. Even though they've had a lot of good news, it may not have its own catalyst in order to either pull or go down. So whatever the market direction is, may be the direction that Amazon moves on Friday. Also next week is the FOMC. So there's a lot of news on deck that could really impact Amazon and its movements. But we do have prior levels that we can use to find entry and exit points as it reacts to that data.